Alan Uckman's with us to do some trading this morning. He's the chief market strategist at bullseyeoption.com. You're looking at Natty Gas, Alan, but first let's talk broad market in general. What are you watching here this week?
Well, we did not make new highs last week. So we like to look to see that happen on a weekly basis, week in, week out. But today we're within 20 points in the S&P once again. So it's important to see how the markets act and continue to make these new higher high levels. But it is impressive that, we're essentially unchanged. We haven't seen a heavy profit-taking round. And I did like Ben's commentary. He threw in a lot of ifs. I'm not smart enough to connect all the dots and to decide these ifs. I just follow the market momentum, and that's what I see right now.
Well, we still, it seems like we got a good bit of it, right?
Yeah, so we're strong, and I know he was talking a lot about the yield getting up to 431. Yeah, we broke it out in the 425 a little bit, but, we're talking about five tiny little ticks right now. Let's see where we are by weekend. And it's not an official breakout in my mind unless we're above that on a weekly basis.
Okay. All right. So right now S&P's up just shy of 1%. NASDAQ 1.5%. You're like not a Russell guy, right? Like, who cares? Small.
The Russell is so small. I didn't even know until last week. Do you realize the Russell market cap is so small?
You didn't know about the Russell till last week?
I know. I didn't know this factoid. Okay, I didn't know this factoid about the Russell. I use it as an indicator because it's always been a laggard, and I look to see how it plays catch up or not. But the Russell's market cap is smaller than Microsoft itself. So when they say small cap, we're talking small cap.
Exactly. That's very true. Lives up to the name. All right. So, Natty Gas, what brings you to this wasteland of destruction?
Exactly. Your negativity, that's what brings me there. That's a very positive sign. If you've got nothing but bad things to say, it's time to start paying attention. If you look at natural gas, it's 50% off its October high. And so, if you look at natural gas as a commodity, it's down 40% in the last 52 weeks, whereas oil, and it's not the same, obviously, but oil is up 25% in the last 52 weeks. XLE is the ETF that tracks all of the energy stocks as a basket. So it's undervalued with a PE of 8. So I see value here, and it's had an extreme sell-off. For 8 to 10 months, it traded sideways in the UNG. It traded sideways between 24 and 32, then it broke down, and the distance of that breakdown was the distance of that sideways action, and so it went to the 15, 16 level. So we found a serious base here at 15. So it's been between 15 and 18 for a month, a breakout of that range to the upside, targets 21. And what I am seeing, the most important thing, is the money flow. I'm seeing money flow into it, and I'm seeing bullish divergence. And the fact that we made new lows, but not new highs and implied volatility. So the actual fear, even though you're fearful of it continuing going down, the actual, numerical fear did not make new highs. That's very much a bullish sign that we could see a sentiment shift and some short covering.
Yeah, I mean, we held, the old $1.50 low. I'm all for Natty Gas crashing. Cheaper to heat my apartment again. It's getting colder.
It is cold out there. I'm seeing snow, but we don't want to talk about that right now. The way to play this is with the July option. I'm looking at a July 12th call, which is deep in the money. Again, here we're down at decade lows in the actual commodity. There's a lot of things that could see some short covering and a little bit of action. Let's remember, we were at 32 just, a few months ago. So, I mean, it's been cut in half. And so I'm looking at that 12th call, which is trading for about 4.25, 4.5. It's 350 in the money. It's got 4 months of time. It's got a high, healthy delta. You've got limited risk. Being long from 12 is a nice chip and a nice probability play in my mind. And there are a lot of things that can get natural gas going in. Any sort of disruption, any sort of weather, any sort of, we use a lot of natural gas for electricity, and maybe it gets hot. Maybe it gets hot sooner than later.
All right. But not too hot to handle here if you've got the in the money calls.
It's not too hot to handle with my limited risk strategy of positioning for success and being there through the ups and downs and seeing that sentiment shift, because when you get some people that have to cover these big profits, and they're unrealized profits now on the short side, then you could get a little bit of a spark. A natural gas spark. There we go.
Yeah, well done. Hey, why UNG, and why not just buy the futures, Alan?
Well, the UNG, anyone can trade it in their trading account, so it's a little bit easier. I like options. You could trade options on the futures themselves. This is a really good liquid contract that trades very, very smoothly. So there's a lot of buyers, a lot of sellers. I can execute my trading plan maybe a little bit better than I could with natural gas future.
Got it. Okay. UNG not quite as buoyant though off the lows. It's closer to its lows than natty gas. I don't know what's up with that, but all right, a little discrepancy.
Right. Sometimes there's a little bit of a little bit of something there, but we're at 1550. I like it.
Okay. Thanks, Alan. Appreciate it. Thanks for the trade. Chief Market Strategist at bullseyeoption.com. All right, hopeful on the broad market and into the natty gas trade. Let's continue our discussion on fixed income and bonds when we come back. It's a Fed week after some hot